From our studios in Los Angeles and Tampa, this is Green Tagged Theme Park in 30. I'm Philip, and I'm joined, as always, by my co-host Scott Swenson of Scott Swenson Creative Development. Today, Scott, we're taking a Disney day.
Hey, it's a small world after all.
Wow, I love that. That was great. Well,
I didn't sing it because I didn't want to have to pay royalties, so I just used the phrase.
All right. Okay, our first story here. I'm sure all of you heard the news that Disneyland Forward is happening. Disney is officially expanding after a 3-year journey. The Anaheim City Council gave final approval this week for Disneyland Forward, the $1.9 billion expansion that allows Disneyland in California to use its existing land to construct new theme parks, attractions, hotel rooms, entertainment, blah, blah. I think the key point, we've talked about this before, but again, just to reiterate, the key points is that it's not expanding the footprint of Disneyland property itself. What it's doing is allowing rezoning to take parking structures and basically build on them to go vertically up, and also allow expansion of other parking structures, along with allowing new construction or basically remodeling of some other areas. So basically, they're trying to go more vertical is kind of how I think of it. They're trying to utilize their footprint better and go more vertical. There's a lot of rumors, a lot of talk around what might be happening. I'm just going to say the only thing you need to know right now is that nothing has been confirmed as of the date of this recording as to what it's going to be. The only thing that was confirmed is that the Avatar land that was announced to be coming at Disneyland is going to be related in some way to Disneyland Forward. And specifically that basically they said Avatar is coming to Disneyland. And they mentioned, though, what that looks like will change depending on what happens with Disneyland Forward, which just kind of seems obvious. That's all we know.
Yeah. And again, think of it as a remodel. I mean, they're not expanding their house, they're remodeling their house. But they're remodeling it in a way so that they can get really more attraction in the space that they got.
They're going to be able to add capacity, basically. It's just not going to physically be any large. Like the space, it's going to be more vertical, which is smarter, honestly.
Well, it's, if you think about it, parking structures, midday, you walk through a parking structure and you see maybe, 15, 20 people walking around. That's now going to be 15 or 20,000 people walking around, and filling out that space in a completely different way. I will say that, we talked a couple episodes ago about leading with those brands that we feel are most impactful. I do find it unique and unusual that they're saying, well, we'll definitely have an Avatar land. Because that's really not the strongest.
I know.
IP that they have control over. Not really even close to the strongest, unless there's something that we don't know, as far as new films, new whatevers that will tie into it. But
I can't imagine it matters. Even if they release a new film, who cares? Nobody.
Well, I mean, because and I will say that the Avatar themed area in Florida is lovely. It's really well done, but it's an IP that not as many people are chomping at the bit to see, and in fact, most people in Florida forget it's here. So,
yes,
we'll see. But it's going to be. It's suffice to say that Disneyland is going to have a more expanded attractions footprint. I think that's probably the safest way of saying it.
Yeah, and more capacity.
And we'll see what they do about parking.
The capacity will definitely be higher.
Yeah, capacity will be higher, and I'm sure that there is infrastructure surrounding that increased capacity. If you happen to live in Anaheim and are going, oh crap, it's going to get crazy, and it will for a while. But I'm hoping that is all part of the Disney Forward plan. I know here in Florida, it usually is, and quite often has been. But I will also say that if you're driving across I-4 and once you get to the 4 or 5 exits that are Disney property, it slows down to a crawl no matter what time of day it is. So increased capacity does mean increased traffic, and hopefully Disney has planned for that. Just wanted to throw that out there in case any of you are planning to expand your own parks. Take all that into consideration.
To be fair to Disney on this, I'll just mention this because Scott brought it up, but there are provisions in that agreement that do address some of those items. They address the need to relieve congestion. They address to purchase some of the city streets, so they are able to expand them for the capacity. It also includes provisions for, I believe it's 30 or 50 million, somewhere in there, some amount that's earmarked to create more affordable housing nearby, just to counterbalance the event. So I mean, there are sewage upgrades, all that's in
Right.
there. So if you're interested in more in
Good.
that, just read into it. But I just wanted to give everyone like the headlines.
Right. Well, and I do think it's important to recognize that it's not just the park; it is the park and the surrounding area that is being impacted.
Yes. Well, speaking of of I think places that are being impacted. So the next thing is California reports record tourism numbers. So here's the thing: our governor Gavin Newsom, he held an interesting little like press conference, like on in like a photo spot with like the bay behind him, basically. With the bridge behind him, and it's very picturesque, and kind of gave this this news conference where he was basically touting California as let's see, he said that travel spending in California reached an all-time high of 150 billion in 2023, surpassing the previous record of 144 in 2019. And spending was up 5.6% from 2022. And California continues to have the largest market share of tourism in the nation. So I kind of gave this thing. Here's the thing. It got mixed.
You guys knew. Okay, no, wait a minute. Those of you who have been listeners for a long time, you knew just by the tone of Philip's voice that there was going to be a. But here's the thing. You knew that was coming. Here's the thing.
Well, so on its surface, look, nothing against knocking Newsom. He didn't lie technically, right, in what he said. I just think it was very misleading, and a lot of other outlets picked up on this. And so I dug into the report itself. I found the report that he referenced, and it's like 80 pages. We'll link to it in the show notes, but I'm gonna give you the wider context here, because the big thing he didn't mention was inflation. So here's the thing: was he correct in that it was 150 billion, and that is all-time high? That's an all-time high, but adjusted for inflation, travel spending in 2023 was down 14% from 2019. In 2023, so that's the first thing. Adjusted for inflation, it's actually down. The second thing is, he didn't mention this, but there's actually 98% of the jobs compared to pre-pandemic peak have been filled. So a near full travel employment recovery. So that actually I think is better news, in that we've also almost gotten the full recovery. And then a few other interesting things. If you look at national spending on travel and tourism, it's 1.3 trillion, which is only a 0.5% growth from 2019. And I feel like that is the actual picture that Scott and I have been talking about for a while. But I think that's a perfect thing to say. We're at a 0.5 percentage point increase on nationwide travel spending from 2019, which is basically like, again, we are finally there, but it's taken halfway through 2024 for us to kind of get back to a little bit of an increase of the all-time high. I think that to me is the biggest perspective for everyone to understand on that. A few other numbers that, again, Gavin, he didn't mention them, but I think they're important for the Disney conversation, is to look at the international spending that we saw, which in 2023, the Asia Pacific region in 2023, the Asia Pacific region, which was the largest contributor to international travel spending in 2019, only spent 53% of its 2019 levels. So again, that's another great big top line thing to wrap your brains around, which is that, like, as we're barely a 0.5 percentage of recovery over here for our country, they're only at 53% in Asia, which is actually, I think, kind of good news for international places like Disney, because they have parks there. And so if you have a lot of things in there, then you can expect there is going to be a return eventually to that growth. So you're going to expect the margin of growth in those areas to be much higher than the margin of growth in the United States, because we're only at 0.5. And the last thing is, he's not really wrong. It's just the twisting of the numbers. But basically, if you break this down, California is 11.5% of the spend of the country. I mean, it's a big country, and for just one state to control 11.5% of the tourism spend, that's a chunk. I mean, that is a chunk. So it's not wrong, but definitely like kind of making the numbers seem like like it is an all-time high. He's not wrong, but it's like it's not really that. It's more like it's down 14%, but in the context of the country, like the country, blah, blah, blah. And then in the context of the nation, it is the biggest place. But I think it's all about context, and for us understanding the macro trends, I think this helps us reorient ourselves to everything.
Yeah, and I think it's important to recognize that, like any statistic, you can use stats to pretty much make any point you want to make. Um, you can, and there may be somebody listening who doesn't necessarily agree with Philip's assessment of this either, who can say, yes, but there's this, this, and this. I doubt that, because Philip is very thorough, significantly more thorough than I am. But if that is indeed the case, that's fine. What I think is important to recognize is, yes, you can, and let's face it, politicians and people who are looking to get investors are always going to use the numbers, and position them in the most positive light. That's what they're supposed to do. So not holding anything against, Newsom or any of the folks. That's what they're supposed to do. I think the important thing to me, the most important thing to recognize here, is we are exactly on track, at least from what Philip and I have been saying. We are exactly on track when it comes to normalization. We have gone back to and slightly above pre-pandemic, the pre-pandemic numbers, which puts us in pretty good stead, especially, as Philip mentioned, in comparison to the Asia market right now. We're doing pretty well there. It is, I for all intents and purposes, it is positively flatlined. We've come back to that. We've come back to that normalization. We can't. The downside is now, we have to build upon that, and we can no longer use pandemic as an excuse. It's one of those situations where we've talked about how whenever any park or any company or entertainment organization in the world has some sort of downtick in their financials, they will find something to blame it on, whether it's the weather, whether it's tourism has not returned to its levels, whether it's blah, 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 blah. Well, what I'm seeing here is tourism has returned to its levels, at least in the state of California. And does this correlate directly to Disney announcing their expansion? Maybe not, but it sure sounds like the idea was to bolster and to reinforce one another, because let's face it, when people come to California and spend money at Disney or any of the parks, really, it helps California. So tourism, as Philip pointed out, is 11.5% of the national spend, and so therefore tourism is obviously a huge business in the state of California. It is here in Florida as well. So I don't think we have the opportunity here to go, yay, it's a major win, everything is up and up, and it's the highest it's ever been. Nor do we have the right to say it still sucks, because that's not true. We are finding that normalization point, and in order to keep that at a normalization point, it sounds to me like not only Newsom, but also Disney is saying, look at the confidence we have in this, so that if they have confidence, that translates into the customers, the guests, having confidence and continuing to go to California for vacation and enjoying the wonderful weather and parks, et cetera, et cetera, et cetera. So again, it's kind of like we've kind of dug into all the minutia to basically say we're in an okay place.
Yeah. Yeah, like,
and we're continuing to grow.
Yeah, like I think in California, yes, are they, like, is it as good as 2019 yet? Not yet, but like Scott said, it's pretty flatline. Like, it is still down, adjusted for inflation, from 2019. However, on a nationwide scope, it's only up 0.5%. So, like, relatively speaking, again, it's in a pretty good place, like Scott says. And then, also, the whole nation, our whole country spends 1.3 trillion, and California being 11% of that is still good. So it's again, it's like, yes, it's like, is it like going gangbusters and everything is crazy, like like the gold rush days? Like, no, but it wasn't supposed to be. It's exactly what Scott said about the minutia. And that leads us into our next big story kind of perfectly. And I'll share my little conspiracy theory after we get through the headline. But so
Philip has a conspiracy theory?
goodness,
No.
heaven forbid. So so Disney had their investor call, and I think the big headline from the investor call is that Disney Plus was finally revenue positive, which should have been fireworks and champagne everywhere. They're not sure it's going to continue to be revenue positive. There's still some things I got to iron out with it and whatever. But despite all of that, the stock still dipped 10% because the markets are not convinced. This isn't the financial show. Of course, we don't know why, the market's dipped, but here's the thing. I think that when the market is looking at Disney and they're like, okay, streaming, you're positive, great, whatever. But here's the thing. Your parks division is starting to struggle. And the parks are really the cash cow that makes Disney. If your parks are not working at this point, then Disney is not working. And so I think that's why Disney got punished with the 10% reduction, despite the fact that streaming is coming back. Because even as a revenue, it was like 600 and whatever million. I mean, that's like, I think they're struggling with these two business models, right? The business model of like, it's nice. It would be nice to have a recurring revenue bundle that replaces cable TV, because that's how Disney came about. I mean, that was their original revenue model, was recurring revenue from cable TV. And it would be nice, again, like they've been trying to get to for years, to replace that with the streaming. But the market is just, it's yet to be determined still if that business model even is going to be as lucrative as cable TV. Like it's still yet to be determined, right? So that's a big thing. But what everyone knows is that the parks are good money. The parks are a great business. But if that starts to dip, I think that's the bigger problem. And I think that's my reason. And my conspiracy theory is that all of these were done. Like, I think that Iger called up Newsom and he was like, get on that bridge and make an announcement about how great the tourism is in California and how everything is incredible and it's about to be a gold rush and everything, so that people see, oh, tourism great in California. That means that the numbers are going to be up at Disneyland. So it's going to be fine, because they know that the numbers are starting to stagnate and slow down. And Scott and I would say, yes, that's the equalization that we've been talking about forever, but Wall Street doesn't really like understand that, and so they
understand it. They don't like it. They don't like it.
Yeah.
That's the real issue. They completely understand it, but let's face it, there are people who couldn't give a rat's behind about Disney, whether they are successful or not. They want to buy low and sell high. That's what they do. And that's fine. But yeah, it's interesting. I totally understand your sort of conspiracy theory concept. And I completely agree in the fact that, Disney is still struggling so hard to hang on to what made Disney, which was to take the same IPs and put them out there on multiple platforms. Disneyland started because Walt wanted someplace where people could experience the movies. That's really it. And then, that we've talked about it forever. Disney's multiple layer IP distribution has been a huge success for them over the years. It was Disneyland in person. It was going to the movies to see the pictures. It was Wonderful World of Disney on Sunday evening. It was going to the drugstore and picking up a Donald Duck coloring book. Hitting everywhere you go, you see something Disney, and Disney makes some money off of it. That has been very, very successful. That concept has been very successful. As Philip stated, when it comes to streaming, that's still kind of a wild, wild west. It's not. We don't know whether it's going to be the cable television replacement. It appears so, but I'm curious because
the margins are not there yet. That's
the margins are not there.
The
yet.
margins
Exactly.
are. That's the thing.
Well, and that's also because everybody seems to think that it's going to be the next thing. So there's all kinds of competition out there. And when you're holding on to, we've done probably, oh gosh, for the last 3 or 4 years, we've talked about content is king. And, that's, I think, the biggest challenge when it comes to streaming. you are hesitant. I think the consumer is still hesitant to invest what it really costs to do what it really costs to be profitable as a streaming provider, because they'll be like, well, they've got this that I really want to see, but so and so has this and so has that. And once I've seen all the stuff that I want to see, once I've seen all the Star Wars movies, I'm gonna get rid of Disney because I don't really care. I mean, there's all of that. But I think that's what's unique here is, I'm not sure that Disney views California as their true cash cow.
No.
Well, I think they actually would rather have Florida do better.
Well,
but
yeah, it's just he did mention it. I didn't even read it, but I'll just to, because Scott give context for that. So to give you the actual numbers, Disney Plus and Hulu posted quarterly operating income of $47 million compared with a loss of $587 million a year earlier. So that was great. But what they said specifically about the parks is that actually the last performance was outstanding for the last 3 months ending in March, with revenue up 10% and operating income up 12%. But Disneyland, despite growing attendance and per capita spend, saw results dip year on year on higher costs, including labor. A big surprise, Iger said that parks growth in the current fiscal quarter will be flat for a few reasons, including some normalization of post-COVID demand as it relates to demand, as we just talked about, while consumers continue to travel in record numbers and we are still seeing healthy demand. We are seeing some evidence of a global moderation from peak post-COVID travel. So in a Q&A, of course, he said he expects the parks to rebound in the fourth quarter, which of course we would be like, yeah, because it's not a shoulder season, duh. But during the Q&A, he said, in terms of attendance, what we're basically communicating is relative to post-COVID highs, things are tending to normalize. The parks business did 10% growth in the quarter. Obviously, that's extremely high revenue number. We still see the bookings as we look ahead and indicate healthy growth in the business. So we still certainly feel good about the opportunities for continued strong growth. And it's that he's not wrong, right? He's not wrong about any of these things. And back to what I said earlier when I quoted the 53% utilization in the Asia Pacific region, they have parks in Asia. So the parks are going to, as those things continue to grow and whatnot. But I think what he's getting at is, we've talked about the normalization, but I would say, Scott, it's a little bit more than the normalization. I just think for some reason people are so attuned to the Disneyland numbers. To your point, unfairly so. This is kind of almost an unfair criticism in my opinion, just because if you look at the portfolio as a whole, there's a huge opportunity there. It's just Disneyland in and of itself is struggling due to labor, like you said, but also look, Universal right now in the news is eating Disney's lunch. They are it's like there's memes everywhere of Epic reveals new Super Nintendo Land and plans for incredible coaster that does all these technologically advanced things. Disneyland unveiled a new bus wrap as their new ad campaign. So they're eating their lunch and they can't even tell us what they're doing for Disneyland Forward. Even in the city council meeting, some of the people who were like, you expect us to vote on this without you telling us what you're going to put here? And Disney's like, yes. And they're like, I mean, okay, but shouldn't you have more concrete plans than Avatar ? And they're like, no, dreams. And you're like, okay, I mean, they're just, and then the park experience continues to degrade. And they're Pixar Fest. I mean, with their dancers that are less than half of the dancers that they had for Paint the Night or for any of the, I mean, their offerings are not even close to what they were in 2019. And we're paying more for less offerings. I think that's finally starting to catch up to them. And they're finally starting to kind of be held accountable, for the poor performance of the park. You can't expect to keep making all this money from your real business, which is parks, if you're not investing in it. I'm sorry. Rant. I'm done.
Well, and I think that, and I think that, what the stockholders are saying, or what the stock prices or stock value is saying, is, maybe it's time to back off a little bit on the streaming and invest. Because if they were to take,
Yeah.
if they were to take half, a quarter, take a quarter of what they're investing in streaming, investing it back into the parks. The question I would have, and parks, all of them,
Yep.
not just California,
All of them.
the parks, I would question, would that give a boost of confidence to the stockholders, and then take the other, amount, whatever amount that would be appropriate, and put it back into dividends
Yeah.
to, to make the stockholders feel more comfortable. I don't know. I'm not a financial whiz kid, and I don't pretend to be, but if it is indeed, you see that the parks are successful. And to be fair, the parks are in everyone's face. Streaming is only in subscribers' faces.
Yeah.
So when it comes to raising the perception,
Streaming doesn't generate press like the parks do.
Streaming doesn't. Exactly.
Yeah.
Exactly. It's, you can't, now with fewer interruptions.
Yeah, no.
Who cares?
I mean, just look at the like streaker, or the in Small World at Disneyland. We just said when you had that guy, and it was like national news everywhere. I mean, like, it's like anything that happens there, is reported on much more. So,
absolutely, and Disney is playing into that. And in fact, our next story kind of explains that. And I'll let you start it, Philip, because again, it's Halloween, and I know how much you enjoy that.
Yeah. So this is now, I think, this is the second year they've done this, but they made a big post for halfway to Halloween. So it's now becoming, clearly if listeners, if you are not doing something for halfway to Halloween, now is the time, because if Disney's doing it multiple years in a row, that something must be right with it. So they're not the fastest to adopt new things. That's what we talked about. So anyway, they made a bunch of announcements. I think the biggest takeaways is that Mickey's Not So Scary Halloween Party is coming back to Florida on August 9th. Like, we repeat that, August 9th, which is basically 3 months. Like, we talked about it being 3 months, and it's basically 3 months now, because it's going to go from August 9th through October 31st. And the tickets are going to be available already for hotel guests, and they'll be available for everybody on May 15th. So it's a thing, boys and girls. It's happening. And Oogie Boogie Bash is also coming back for 27 nights, which is an extended run beginning August 25th. It's an extended run, but in my opinion, it's still not nearly enough of a run. So I'm still curious as to why they're not doing the best they can with that event. I'd like someone to answer me. And then Hong Kong Disneyland is going to do their Halloween from September 12th through October 31st, which is a surprisingly long run for Hong Kong, in my opinion, just because their competitors are not starting that early. But they're just doing everything they did last year. They're going to bring back House of the Villains and the Let's Get Wicked show, which is actually my favorite stage show anywhere. And then their dinner experience with Nightmare Before Christmas. And Tokyo and Paris are not going to start their Halloween stuff until October 1st.
So there you go. Again, these are things that are significantly more media worthy than anything that has happened in the streaming realm.
Yes, correct. And he's like,
they haven't really purchased a huge new IP that they will start, streaming on Disney Plus.
Well, so we always talk about they know, like, it's, I mean, I guess I'm saying I don't think that Wall Street is dumb and that they don't get the concept of shoulder seasons. I think they're more saying, hey, you haven't done anything to resolve the park experience in some of these places. And we know you have this plan for 60 billion over whatever. We want to see something now. Like, we want to see something like today that's going to keep the numbers going up. Because they're like Halloween. And I think, Wall Street's like, yeah, but Halloween is like, it's still months away. What about the summer season? Like, I think that's kind of I mean, great. They announced it and it made a bunch of media buzz and everyone's talking about it. Great. I'm sure that was also planned, right? It's no coincidence it dropped around the time they had the earnings call.
You say that Wall Street and those people who make their living off of it understand shoulder season. I bet most of them don't understand shoulder season, because, like I said, these are not theme park people.
Yeah.
These are people who want return on their investment. They want to buy low, sell high, and so they may not understand and have to be educated by. So I think that by doing these this Halloween announcement, because the parks know that over the summer their attendance is going to go up.
Yeah.
They know it.
Yeah.
They know it. So by saying this and by putting out a date like August 9th for a Halloween event, that's what's going to catch attention. That's what's going to catch investors' attention, where they all of a sudden go, oh, this is a really profitable event, and they're starting it now, 3 months before Halloween. That's smart business. You can just hear those guys sitting around talking about that. And so I understand the concept of doing these long range announcements, because again, they're looking forward, and the parks themselves know that over the summer, they're going to continue to expand their attendance, and the numbers will continue to normalize and with a mild growth. But mild growth is not what any investor wants to hear.
That's true.
They want to hear rapid growth, huge growth, big numbers, double-digit increases. These are all the things that make them very, very enthusiastic about a brand, not just the fact that they care about a really good park experience like Philip and I. So anyway, that is our Disney deep dive this week, and we kind of looked at the positive, the negative, and the somewhere in between. And so I guess Disney really doesn't have a whole lot to worry about, but gosh, they should really listen to what we have to say, because we seem to know what we're talking about. He says with his tongue firmly planted in his cheek.
Bring back live entertainment. Oh, sorry. What?
Bring back live entertainment. Back in my day. So before we get too crotchety, before we become two crotchety old men, one crotchety old man and one crotchety younger guy, we're going to end the show because it's time to go. Thank you so much for listening to Green Tag Theme Park in 30, and we will see all of you and all of your friends next week.